Basics of stock market. Investment and need of investment. The money you earn is partly spent and the rest saved for meeting future expenses. Instead of keeping the savings idle, you may like to use savings in order to get return on it in the future. This is called investment. One needs to invest to: number 1, earn return on your idle resources. Generate a specified sum of money for a specific goal in life. 3. Make a provision for an uncertain future. When to start investing? The sooner one start investing, the better. By investing early, you allow your investments more time to grow, increases your income by accumulating the principal and the interest or dividend on in year after year. The 3 golden rules for all investors are: number 1, invest early; number 2, invest regularly; number 3, invest for long term and not short term. Why to invest? One may invest in physical assets like real estate, gold, jewelry, commodities, etc. Number 2, financial assets such as fixed deposits with bank, small saving instruments with post offices, insurance, provident, pension fund, etc. or securities market related instruments like shares, bonds, debentures, etc. Short and long term options for investment. Short term. Number 1, saving bank account. Number 2, money market or liquid funds. Number 3, fixed deposit with banks. For long term, number 1, post office savings, public provident fund, bonds, mutual funds. Before investing in a market, Before investing, it is always wise to learn the basics of stock market. We have compiled articles and tutorials on the share market basics. Also included here explanation of stock market terms and jargon used by people involved in trading stocks and shares. Whether it is Bombay Stock Exchange, BSE, National Stock Exchange, NSE, London Stock Exchange, LSE, or New York Stock Exchange, NYSE, trading terms are more or less similar. Thanks for watching this video. If you like this video, please subscribe to my channel to get more daily updates. Thank you.